hit the lotto. I would never fail to leave you bullish as hell. Stuffing bags to the fullest, don't sell. This is Crypto Tales. Yo, it's your boy Tails, and it's time for some Crypto Tales. Let's get it. It's time to check out these crypto headlines. See what it's looking like for today. The company Bullish is getting bullish. Bullish is going to IPO with a $9 million valuation. BTC price regains 33K as Square confirms mainstream Bitcoin wallet plan. So it looks like the big guns is trying to create a network for everybody to hold their crypto on. Create ways where they can custody your crypto, sell crypto, basically to have it in their pockets and not yours. Another headline today, the pandemic has accelerated the rollout of central bank digital currencies by 5 years, says a blockchain firm. So I started noticing that after regulations started becoming the big deal, UK banks won't let you use Binance. Regulations are definitely on the way. We have issues with stablecoins. The government doesn't like that USDT and USDC have a lot of dollars in it when they're still trying to create a central bank digital currency. They don't like the competition. They're always slow to the race, and now since there's already stuff that was created, they're trying to figure out how to position themselves. So I can see why the banks are all over USDC, USDT. It says the assets will be disclosed in SEC filing, Circle CEO says in an interview.
Jeremy, welcome back to the show. It seems that the main competitors, so to speak, to stablecoins are not actually Bitcoin or Ethereum. It's more like central bank digital currencies, right? Which are, also pegged to more stable forms of fiat. So last time you were on the show, you said that the US does not necessarily need a central bank digital currency. I guess my question is would you think that stablecoins will end up serving that role? I mean, is there a world in which stablecoins and central bank digital currencies will coexist, or do you think one will eventually kind of overshadow the other?
Well, I mean, right now, we have open blockchains, public blockchains, and we have protocol development and private sector innovation happening on top of that. That is sort of a continuation of the open internet infrastructure model that has powered so many different industry transformations. And I think that is going to be the predominant model that transforms the global financial system. Now, obviously, as this grows and grows to scale, the relationship between the financial institutions that are operating potentially what could become systemically important financial market infrastructure, systemically important payment infrastructures, the relationship to central banks will evolve. You're going to need to imagine that the many firms that participate in those kinds of arrangements are going to have very strong relationships with central banks. And forms of charters that are appropriate to the scale of that they're doing. So my expectation is, private sector innovation, open source, open internet innovation is going to lead us into a world of billions of people interacting with digital currency. And as that happens, absolutely, there's going to be a lot more work to do with central banks, including the Federal Reserve.
So Jeremy, that debate about the transparency of the issue with regards to disclosures regarding reserve holdings and so forth feeds into something of a debate about the regulatory framework for stablecoins. We heard on the one hand Boston Fed President Eric Rosengren make a case for his concerns about the risk of instability that stablecoins might pose, presumably worried about breaking the buck and the idea that the stability of the thing may not be so clear and that should be more heavily regulated. On the other hand, Randall Quarles, one of the Federal Reserve voting governors, said, look, stablecoins gives us this chance to innovate. We should probably do less with CBDCs and focus more on stablecoins. That have implying more of an open approach to this. Where do you see this playing out, and what sort of conversations are you having with regulators about this?
I mean, look, there's a lot of pieces to that. I mean, I think the first thing is, the United States has had a very regulatory around electronic stored value payment infrastructure. And I don't think that Eric is saying, the tens of billions of dollars of balances held with PayPal represent a systemic threat, or that all the money held by Stripe or Square or Apple Pay or others that are huge and are defining consumer scale fintechs in electronic stored value payments infrastructure. I don't know that the same questions are raised there. So I think we believe, though, that stablecoins are different, right? This is a different innovation. It's a more powerful innovation than these closed loop, walled garden proprietary types of systems of the past. And I think it's one that does deserve a greater degree of transparency. And that's why when we constructed Center Consortium and worked on this with Coinbase and built governance models and other models, we went above and beyond what would be needed So that will continue, and I think it's very likely that we'll see adjustments to various forms of bankings and payments regulations around the world in major countries to adapt to some of the nuances and unique characteristics of stablecoins.
The Bank of International Settlements, the International Monetary Fund, the World Bank, they're all planning for interoperable central bank digital currencies. Big planning is going into crypto. It seems like they're moving a lot faster than their timeline said, and I believe soon they're gonna open the floodgates. And when the floodgates are open, who's gonna be there? Who's gonna be there? The liquidity pool. Let them know. Ripple exec says XRP ledger is a natural fit for NFT marketplace. Since we're so new in the NFT game, there's a lot of coins out there that can benefit off of it, just based alone on how fast they move, how cheap the transaction is, because Ethereum gas fees are way too high. And if they can find a marketplace with NFTs that doesn't knock you over the head with all the gas fees, why wouldn't they use it? And XRP ledger is made for pretty much everything, so it's a natural fit, like they said. As the NFT marketplace continues to grow at a rapid pace, many big players are setting their eyes on it. It has been quite a while that Ethereum is rolling out the NFT market without any competition being provided. But now those times are over. While some, including Crypto.com and Binance, have already launched their NFT platform, a few, including Ripple, are also trying to get a piece of the cake. Yeah, let them know. Ripple for the NFTs. Let's go. Just a couple of days before Ripple announces investment in the growing NFT market, Minimal, which has recently able to secure $13 million in a Series A funding round, would be integrating RippleNet XRP-L. In the meanwhile, Ripple presented itself as an adequate option for NFT marketplace to make transactions. Ripple noted that the XRP-L can enable the NFT marketplace to exercise cheap, secure, and fast transactions in a sustainable manner. The company asserted that while the network charges only 0.0004 per transaction, it is also carbon neutral. Let them know. It claimed that in comparison to other similar networks which consume approximately 66 terawatts, 66, a whole lot of energy, Ripple's network only uses 790 kilowatts of energy yearly. Ripple betting on NFTs. I like that they're staying relevant to current trends and still have the best project out there. In her recent statement, Ripple executive Monica Long stated that the XRP ledger is a natural fit for the inscribing NFT ownership, and it is something Ripple is betting on. She too suggested because of Ethereum's high energy consumption and gas fees, Ripple is the way to go for NFT enthusiasts. Lastly, though the crypto market has been going through a major dip this summer, the NFT market has performed pretty well. We're still only halfway around 2021 and the market has already capitalized at 2.5 billion. So we got all these entities working on central bank digital currencies. We got Europe on board with central bank digital currencies and stablecoins. China's already using theirs. The pandemic has forced everything to go faster. It's looking like something big's about to happen. Elizabeth Warren gave the SEC till July 28th to figure it out, so something big's coming down the pipeline for sure. Now looking at today's top gainers, we got Titan up 19%, AXS up 15%, SNX up 17%, ZRX up 12%, Luna 13%, Qcoin 12%, EOS 15%, Atom 6%, XDC. It's looking like some momentum's coming back. We still got a lot of crypto deals out here, so if y'all don't have your bags right, get whatever you need. This is not financial advice. I'm just letting you know what I'm doing because I'm getting my bags right. Yes, sir. So you see what it is. The narration is stablecoins versus central bank digital currencies. And stablecoins want to work with central bank digital currencies, but the banks want the control and they can't control USDC. Not exactly sure what's gonna happen, but I'm sure something's gonna happen in the near future. Just continue to hold them bags, stack that chip, get your money right, buy the dip, and don't trip. And I'll catch y'all in the next one. I'm out.
About to take a trip, you can catch me by the ocean. We'll be up quick, homie, don't trip.
Holding through the pain for some big gains. Jump up on the train before it switch lanes.